Market news now. Mainland Chinese markets jumped in afternoon trade. Troubled Chinese real estate developers are back in the spotlight. Hong Kong's Hang Seng Index hovered near the flat line as of the last hour of trade. According to a notice on the Hong Kong Stock Exchange, trading in shares of major Chinese real estate developer Kaisa was suspended following the Evergrande crisis. Kaisa has also been embroiled in debt issues. It also failed to reach a notes exchange deal with bondholders last week, increasing its chances of default. Meanwhile, in Europe, European stocks were higher with investors continuing to digest the latest news around the new Omicron COVID variant. US stock futures rose in early trading after stocks continued their upward climb overnight from the Omicron sell-off, and that's what the markets look like at this particular point. European markets are in negative territory, various concerns circulating in that particular region. Now that we've given you an overview on how the markets are looking on screen, let's get into that discussion in more detail. And we're going to be doing that with Chantal Marks, who's from F&B Wealth and Investment. Chantal, thank you so much for your time. We've come to that point of the year where most people are probably taking stock personally. Some people are taking stock when it comes to their portfolios and investments and what they could have done better. But let's take stock off the JSE. Year to date, when you look at this performance and going into the year, how are we faring right now?
Well, given the rebound that we saw last year from the lows in March up until the end of December, I mean, we were expecting a decent return. We were saying above money market, so that's quite a low benchmark, but we were thinking that it was going to outperform cash. And we've actually seen a really strong performance from the local bourse year to date. If you were invested in an index tracker, you would be about 20% richer right now. Obviously, there were wobbles along the way, and that is the nature of equity market investing. So we had the index push higher at the start of the year. We had it broadly flat for about 6 months, where it just kind of hovered around the same levels. We had a sharp sell-off as well just before we've had this final little push higher. The JSE's done really well for investors this year.
What do you think is the biggest threat for investors right now? I mean, just about a few days ago, we were all concerned about the Omicron variant because we were not sure what to make of it. And I suppose there's still quite a bit that we don't know, and we're still, going as each day comes. What's the biggest, threat? Is it the Omicron variant, or is it the prospect of inflation?
It's actually neither. So the Omicron variant is going to induce volatility, right? And inflation fears is going to induce volatility as well. I think where inflation is probably a bigger threat is that it could result in irresponsible or kind of I'm not sure what the best word is, but almost a knee-jerk reaction from central banks. And if interest rates are raised and the inflation impact isn't permanent, you could see the economy run out of steam very, very quickly. And this is on a global level, which I think will impact South Africa greatly, especially given the issues that we're facing onshore. So from my perspective, the biggest threat is knee-jerk reactions from central banks. But of course, all of this is a function of stuff like the Omicron variant, COVID-19 in general, vaccine rates, inflation, supply chain bottlenecks, all the rest of it.
So let's bring the conversation and look at our markets. Earlier, there was a SENS announcement from Sabanya, which got me thinking about, cyclical stocks or rather cyclical businesses like mines. I mean, is there a right time to buy when it comes to, cyclical businesses?
Yeah, it's quite hectic because you actually have to buy cyclical businesses when you think they're about to go out of business, and this has been the case for the mining companies for years and years and years. I mean, in 2016, Glencore, I specifically remember, we were thinking was going to go bankrupt. It was trading at 11 rand a share. Similarly, we had Kumba Iron Ore languishing around very, very low levels as well because commodity prices were low, their balance sheets were quite stretched, and it looked like they were in real trouble. The thing is, as soon as you start getting the prospect of a supply issue becomes apparent, you start seeing those share prices recovering because commodity prices are recovering. And once they're doing well, they're printing cash. I think currently the prices are quite elevated. The easy money, as we call it, has been made. So I would probably start trading carefully now that commodity prices are still quite high and these companies are cash flush and they being forced into making some investments in terms of increasing their ounces.
And on the back of that, I was going to ask you, between Impala Platinum and Sibanye, which of the two would you hold, or would it be a case of neither?
I think it would be a case of both, particularly if I'm already a shareholder. I think getting into these stocks now becomes a little bit more tricky. I think there will probably be a better time to invest. But both companies, I think, have investment merits that are completely different from one another. So Sibanye-Stillwater really pushing into getting involved in the battery supply chain, which I think is probably going to be a big positive and potential area of growth for them. And Impala is just doing quite well from a cash flow perspective. They're being quite responsible in terms of allocating capital. So that's also a stock that you would want to own. I think, as I mentioned, it's a firm hold at the moment, but it's very difficult to really punt these shares as a buy right now.
All right, Chantal, thank you so much for your time. That is Chantal Marks, who is from FNB Wealth and Investment.